Hello and welcome to the week ahead with me, Chris Pollock. And what a week we have had. Probably a month's volatility in about 48 hours. And a few of us are feeling the burn in here after some all-nighters and late nights back to back. Getting a bit old for that sort of thing. But yeah, we had a good time, a good week all round, and some pretty easy trades available. Certainly through the election, it really lived up to expectations in terms of trading. Trump was looking like a clear winner from kind of 2 a.m. onwards, and the market's really priced that in. So let's take a look at the charts, and we'll work out exactly what takeaways from last week were. We're probably going to spend a little bit more time on last week than the week ahead this time, just because it's one of those weeks that will go down in history. So let's learn from what we had go by. Well, the Nasdaq. This is one that we saw doing well under a Trump administration, right? Elon Musk is probably not giving Trump his support for free. And tech stocks like Tesla, I think, was up about 15% from the close on Tuesday to the close on Wednesday. And the tech sector did pretty well this week. Nasdaq moving to those all-time highs. I think we discussed on here, 3 weeks ago, that we'd get Nasdaq running towards those all-time highs around the election. I think said before the election. It sadly happened during the Fed yesterday and the day after the election results. So maybe a miss on that one, or maybe you'll forgive me. A day's grace. But yeah, big move higher. Stocks were one of the big winners. Why? Well, the the Trump administration is likely to cut corporate tax rate, right, and tax for the wealthy. So people who have tons of money are going to be able to buy more assets like stocks. The favorite asset of the last couple of decades. So it's unsurprising to see the stock market's doing so well. There is a little bit of confusion when you look at things like the, well, if you take a look at the 10-year yield. So if you look at the US 10-year, we've actually seen, well, quite a hefty move lower after the Fed, but on election day, this was a big yield move higher, albeit it was short term. But at the time, normally higher yields correlate to lower stock markets. But that didn't occur on this occasion. We were seeing higher yields pushing on in the small hours of Wednesday morning because Trump was being elected, and he is more likely to borrow more money, effectively, right? He's not, what's the word? Not a austerity leader, is he? He's gonna, keep the wheels turning and the economy greased, regardless of any potential inflation fears. But this is why the yields were initially repriced higher. Although having said that, and having got through the Fed, by the time we got there on Wednesday night, on Thursday night, it was the Fed, unusually on a Thursday, and we'd undone that move, and actually we're back to where we were right now on those yields. So the yields are completely reverted back to where we came from in the small hours of Wednesday morning, whereas the stock markets continue their pump, right? This was the 2:30 open on Tuesday, which was already pricing in the move. By Wednesday overnight, we were rallying on the open. We had a little wobble for that first half an hour after the markets open, but we're still pushing highs. And in fact, if you look at the SPX, you will see that we are a stone's throw from the spot 6,000 level, 12 points. By the time you see this video, we may have traded it. They will love to round this week off with a big round number being taken out. So look out for those headlines over the weekend. 6,000 S&P. What else were big winners? Well, we had the Nasdaq being a big winner, maybe the biggest winner of all, by the likes of Tesla and even Truth Social, which was a 50% gainer, just a $3 billion made by Trump on the night of his latest win. Other big winners were the crypto market. If you look at Bitcoin, we were up about 7,000 points on that one. Not to be sniffed at. Big losers being the likes of gold here. We're down about $70 on the day, although half of it's been taken back due to the dollar strength that we were getting as those yields were picking up. So huge volatility out of the election, and there's more to come, right? We don't know. He's still uncertain on whether he's going to complete the election by taking the whole House. It appears likely, but we're still waiting on, I think, Arizona and California to confirm that. So having taken the Senate, is he going to get a clean sweep and get the House as well? And that's going to make it much easier for him to get all of his policies through. So what a week we've had on stocks and volatility wherever you look, and markets have been fairly well behaved. None more so, I'd say, than the table, right? The pound against the dollar had a really nice day yesterday on those Bank of England rate calls. We had that big move higher as they put rates not on hold. They did do a cut, but it's not as big as or as likely to get another one going forward. It's going to be gradual, was the takeaway from it, and that's kind of surprised the markets, having seen more cuts than this. I know many of the big banks were suggesting we were going to get cuts at maybe every meeting from now till June, certainly from the ECB and the US. If that was the case, it would be likely that the UK would follow. But Bailey was kind of pouring cold water on that yesterday, and that's what led to this strength in the pound. Higher interest rates for longer means stronger currency. So this was a very nice trade on the pound yesterday. And then we went into the Fed interest rate decision, right? So if we zoom in a little bit closer on the S&Ps last night, and it wasn't the most interesting Fed for the S&P 500. It was a little bit of a chop fest. Maybe we had all the fun from the election, but this was the rate decision. You can see how horrible that was. We had a little swing of the lows, a run to the highs, and by the time we got to the close around here, we were kind of almost back in the range, just nudging out of that initial high. So not the most exciting Fed range you'll ever see. If we want to put some numbers on this, the range of the whole thing was like 27 points. If we want to do a percentage on this, you're looking at, not even 0.5% move. Gold, by contrast, was a little bit more lively around those sort of times. The low that we had down here at 94s all the way up, we were knocking on the best part of a percentage move, $23 from lows to highs. A bit more life in the currencies, in the bond markets, and in gold than there was in the S&Ps. So I think maybe a few traders were feeling the burn of a busy. Though a few in here were, and I most definitely are, late on a Friday afternoon. So that's kind of a little recap of the week. Volatility will be around for some time to come. Trump is now in. Those of you who are new to trading may not remember, but you might want to set yourself up with your tweet deck. If you're not familiar with this, there's a functionality on Twitter, what's called X Pro now, where you can list various, you can follow people's lists, create your own lists, follow individual people. It's going to be well worth having Trump on here. This is when I first got this functionality, was just to have a list of purely Trump tweets. Why? Because when he sits on his golden throne on the morning, or any morning, it seemed at times during his last presidency, he would throw something into the market that would move it generally up. And in a way, this was more valuable than having a Bloomberg terminal. So a new Trump presidency, or a new term of Trump presidency, hopefully that brings something back. It made it a very cost-effective way of getting live news through. Want to reach out to me, you know where to find me. Help you set all that up. So let's look at the week ahead. That's what we're here for, right? If we want to look at the calendar for next week, well, we do have on November the 11th, we've got a bank holiday in the US, right? So we've got Veterans Day. Banks will be closed. We've got Canada off as well. France is off. So Monday is going to be pretty quiet. So let's maybe not waste too much time on that. Rolling into Tuesday, a couple of things to look at. The UK's equivalent of the non-farm payrolls are out. The claimant count, 7 a.m. We've got some of the Fed members speaking again. The FOMC and Bank of England members will all be available to speak, having been blackout and into their meeting this week. So it'll be interesting to see their take on this and the Trump presidency, and Powell's comments about whether he would leave his office and his tenure if Trump were to ask him, or a few Fed members will be asked this question. Well, it's going to be kind of monetary policy against fiscal and government policy and members. I think there's going to be a bit of a war of words between these two institutions. Get your popcorn at the ready. This could be your Keane versus Vieira for the financial world. Also on Tuesday, we have Home Depot earnings, think out at 11 a.m. This is one of the last big Dow earnings of the season. So that's one to look for on Tuesday as we roll forward. Then Wednesday, we're on to CPIs, a number that we loved a year or two back is starting. We are getting CPI on the year-on-years back into the reasonable range around that 2.5%. So there's not too much concern with the CPIs around these numbers. And when we are seeing these numbers more reasonable, doesn't really matter if it's 2.6 or 2.2. You're not going to get the volatility we had when we were getting huge prints up in 2022. Nevertheless, this will be a big number and arguably the biggest single number of the week. So paying attention to that will always be important. Rolling into Thursday, those of you who want to trade through the night, we've got the Aussie employment change and unemployment rate, pretty good number for those Aussie pairs in the ASX. We have the PPIs, always, as we mentioned, less important when it comes after the CPI. On those 1 or 2 occasions a year when it comes before the CPI, we do care. I won't be paying too much attention to it on Thursday. And Powell's on the wire. It's a bit late for me, 8 p.m. on a Thursday. I'm sure I'll be having better things to do at that time. Then Friday comes around, getting GDP out of the UK, a raft of UK numbers come out at the same time, and retail sales into the close of the week in the US. Bond markets will be interesting, but not next week. The first bond auctions for the week or under the Trump tenure will be really interesting to see what prices people are willing to accept on their yields. But next week, we really do not have a great deal. In the US, we've got 3 and 6 month bills. They're the most interesting of the week. Other than that, you've got the 8-week and 4-week ones on Thursday. So this Tuesday evening, again, somewhere more fun. Back into London time, we're looking at 4:30 London time for those figures to come through. Slightly more interesting auctions in Europe, the German Bund. This is one of the things that you might want to pay attention to in Germany. Their swap rates are above their 10-year yields, and that's the first time since the dawn of the euro that this has happened. And this is leading to a potential liquidity squeeze in Europe. Now, these triggers are potentially incredibly risky for markets. And to put this into some sort of context, I'm to bring the DAX on its way over here. Let me just put I don't want it on a footprint, but let me get it off this. You'll see the action that we've had today on the DAX. A huge sell-off from the open. And yeah, the German stock market is not enjoying life. We're down 1% on the day. We were down 250 points at one stage. This is in a market where the US stock markets are up today. In fact, they're at all-time highs as we speak. So the fact that Germany is in such a vulnerable state here, kind of a few reasons. Their PMIs, as we know, have been terrible. Their manufacturing PMIs have been awful. If Trump tariffs are to go on imports into the US, well, you can assume that the US is going to buy fewer BMWs, Mercedes, and Porsches than they used to. That's going to hit the euro economy. And politically, they're in turmoil. Their coalition of 3 parties is down to barely 2. As one of the parties, the second largest, resigned this week. Looks like there's going to be a confidence vote into the early part of next year. And between now and then, it could be really tumultuous for Europe, certainly for Germany, but also the euro might be a little bit weak through this period too. So something to pay close attention to is the DAX, I think, over the course of the week. The German story will roll on. If you can find some articles to read about this before the week kicks off, it should stand you in good stead to see the potential fallout from this, because this could just be the beginning of something much, much more sinister in Europe. But yeah, so to end on that horrible note, probably a good place to do it after such a tiring week. If you do want to reach out to learn more about trading the volume profile, it worked incredibly well today. These point of control moves and the moves lower. You can reach out to me in all the usual places. Long. Other than that, have a lovely week.